Technicals, price targets, and the deflationary pivot. Today we are going to be looking at Injective's aggressive shift into its supply squeeze phase and the institutional treasury play by Pineapple Financial. Let's pull up the chart. So I've got this thing zoomed out almost as far as we can go, and you can see current price is right around $3.10. And this is just slightly above historical all-time lows. If we zoom in and just take a look at what kind of all-time lows we're dealing with, we're talking around $1.12. It might have even gotten down to 90 some cents, but we're flirting with heading straight down. So let's draw a couple Fibonacci lines and just see if there's anything we can use to our advantage to see where the next stop might be. But you can see we've been trending down ever since 15 bucks. 15 bucks way back on August of 2025. It's just been a straight trend line down to where we're sitting now at $3. So let's first off go all time. I always like to draw one set of Fibonacci retracements from the all-time lows to the all-time highs. So we're looking at somewhere around, we'll just call it $1.09, all the way up to the peak at around 52 bucks. And we got nothing, right? We're just in this massive zone. And this is such a huge range from $1 to $52. I didn't expect much to hit, but you can see we just flirted with this $12 level, went down, broke back up, down, broke back up, hung out there, and then just collapsed. So let's move on over here, a little more recent, and see if anything looks like it's being honored at this time frame. Let's remove this Fibonacci rate, and we'll leave it on there. All right, so let's go from this low right here, which is on April of 2025 at around $6, and we'll go up to the peak, moving left to right. Okay, this looks like a little bit better. You can see this low we did bounce off it, went back up, almost touched the 50% retracement, and then just collapsed. And we fell down, broke the low, all the way down to the 1272 retracement, and we broke down below that. So this is not looking good. Like short term, this is not looking too good. I'm going to zoom in even further and just see where our next target could be, because according to these, I mean, we're looking at $1.05 again. But let's look at this most recent swing low to swing high, which would be 421 to 583, and see if anything lines up. So we'll do one more set of Fibonacci. We're going to go from this low on January 2nd up to the high on January 6th. Okay, and you can see we are right on this 1618 retracement of $3.06. So this needs to hold. Okay, it's boom, 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 hit about 3-4 candles right on this line. This needs to hold. If it doesn't hold, we're looking at this swing low, like this green wick right here. You can see it, which was at $2.62. If that doesn't hold, I mean, we could be looking at $1.33. Okay, so that's a quick look at the chart. Again, guys, this looks pretty ugly. As far as just from a purely technical perspective, it's not looking good for Injective. We need to see some support start to happen. Otherwise, like I said, we're looking like a straight shot down. So what's going to give us that support? Again, I've found a couple news stories from the last 4 weeks that we're going to run through, and then we're going to finish up with some 12-month price projections. So first up, we have to talk about the supply squeeze and IIP 617 activation. Injective has officially implemented the supply squeeze, which is a protocol upgrade that doubles the rate of token deflation. By tightening issuance parameters alongside the existing burn auction, the network is aggressively shrinking the float. And I just did a short not too long ago about understanding the tokenomics of the cryptocurrencies that you are invested in. Some of them are inflationary. So seeing that Injective, right, this is a major news story. Anytime they mess with the tokenomics, seeing that Injective is trying to proactively double the rate of deflation is a big thing, and that could affect the price. because this is the most significant tokenomics shift since mainnet launch. For traders, it changes the math on long-term diluted valuation. It's no longer just about burns. It's about structural reduction in daily sell pressure from the stakers. So let's keep an eye on this. Let's see if it actually makes an impact in the price and if we can see that supply start to shrink. Number 2, institutional treasury adoption from Pineapple Financial. Say that 10 times fast. So as of February 11th, 2026, Pineapple Financial, PAPL, confirmed its holding of 7.2 million Injective tokens, valued at approximately 42 million bucks in its digital asset treasury. So guys, another DAT. We've seen one for Avalanche. We've seen one for Ethereum. We've seen one for Bitcoin, obviously. This is going to be I just feel this is going to be the model where there's going to be one big DAT player for all the major tokens. But anyway, they have also launched a real-time dashboard to track the holdings. So Pineapple Financial, right, is the Injective DAT. Because this is going to provide a floor. Anytime we get a big buyer and a big institutional player that is focusing on one token, they are going to provide somewhat of a floor of institutional conviction. So when a New York Stock Exchange listed fintech company chooses Injective for its treasury over Bitcoin or Ethereum, it validates Injective as a premier institutional grade layer 1. This is sticky capital. They are just going to be buying, buying, buying. It's not mercenary liquidity. And number 3, guys, the network milestone of 2.8 billion transactions was hit. So Injective recently surpassed 2.8 billion lifetime transactions, briefly overtaking Ethereum in daily transaction volume this month. And this surge is largely attributed to the new multi-VM integration, so to EVM and SVM compatibility. The ghost chain narrative is dead because this volume reflects actual utility and fee generation, which feeds directly into the community buyback program. So high usage in bear market is a massive leading indicator for the next expansion. So guys, let's take a quick look at our 12-month price outlooks and then we'll let you go. We're talking bear case, base case, and bull case here. So our bear case is $2.10 to $3.50. And this is for 12 months, right? Market-wide capitulation continues, right? We see the sell-off. Crypto as a whole suffers. Bitcoin drops below 60K. Injective fails to attract new DApp liquidity despite deflationary mechanics. It's just going to be a crappy time. Our base case though, $8.50 to $12. Sentiment across all of crypto will stabilize to neutral. The supply squeeze begins to show on chain, and Injective would reclaim its 200-day simple moving average and settle around the 2024 valuation era. And our bull case, and this is probably low probability but possible, is $18 to $25. So staked Injective ETF approval, right? We see the Canary and 21 shares get approved. High frequency trading firms migrate to Injective's multi-VM. The deflationary supply shock would trigger a parabolic recovery. Again, 18 to 25 bucks. Low probability, but possible. In closing, guys, Injective is fundamentally a different beast than it was in 2024. The supply is now shrinking, which is good for token holders. And the institutional adoption is finally showing up thanks to Pineapple Financial, right? The balance sheets, they're starting to buy Injective as a DAT holding. So the question is, does the supply squeeze outweigh the current macro fear? Drop your price targets down below for your end of year 2026, right? Are you accumulating at the $3 range, or do you think we go lower? Guys, this is Luke with Ledger Prime. We'll see you in the next one.